Now to the market this morning as stocks move a little bit higher in early trade. More bullishness around the AI trade after Taiwan Semi's results. Some bullish guidance from CRM. Joining us here at Post 9 this morning is Meera Pandit, global market strategist at J.P. Morgan Asset Management. Meera, welcome back. It's good to see you.
Thanks for having me.
Do you think there's incremental new China risk?
In some ways, yes, but I think we've also seen this movie before where we see trade tensions ratchet up. We see trade tensions dissipate. So what I'm really paying attention to right now as it relates to trade is what goes on from here on out when we think about the Supreme Court and some of the rulings around tariffs there. Because that's meaningful if you do have some change there where the administration is reestablishing tariffs under different legal underpinnings. That creates some uncertainty for companies. And it also potentially could infuse some lift into the bond market when we think about yields because of that uncertainty. And because if some of these companies have to get their money back and the government refunds some of that, that's going to change some of those revenue dynamics for the government in the short term. So those are some of the longer term issues that I'm thinking about as opposed to the ebbs and flows of the headlines around trade, because I do think we want to go into this as the administration with a stronger negotiating position. So I think that there's something to that.
Right. I haven't heard many desks argue that the conservative justices would find white space between themselves and the appellate dissents, meaning they're probably going to back the administration up. And even if they don't, there's always 301, there's 232, right? Do you expect major change?
I would expect there's some shift friction as you might see some change around how those legal underpinnings work. But overall, I think that the direction of travel is clear. There will be a higher level of tariffs than we've seen before. That will change some of the dynamics around government revenues. It will change some of the dynamics around expenses to companies and consumers.
Yeah, I kind of feel like CEOs should just prepare, like this is how it's going to be, and they are doing that right now. I'm just amazed at the resilience of the equity market in the face of continued risks around U.S.-China, the shutdown, which the Treasury Secretary now says is costing $15 billion a day. I mean, it's the path of least resistance remains higher. How do you explain it?
Ultimately, if we think about what's going on from a policy perspective, it's moved from an acute condition to chronic. So companies are adapting. They're being flexible. And clearly, so are market participants around some of these risks. And while some of the policy risks for the rest of the year may be to the downside, you get into next year and you think about some of the stimulative impacts of the One Big Beautiful Bill, whether it's higher tax refunds, putting more money in the hands of the consumer, helping bolster that softening consumer environment, or on the company side, you think about AI and some of the different provisions that can help with R&D and CapEx, and you might see a broader lift to some of that AI spend from that perspective. So the direction of travel going into 2026 is some catalysts for a lot of the market themes that are playing out right now.
There is a theme, especially this week, that the AI spend trajectory can be sustained because of the lift to productivity. And Besson suggested to Sarah yesterday that might be on the come as early as Q2.
What you tend to see with some of these heavy innovation cycles is in the early stages, some of these circular deals are almost necessary to get this technology to exit velocity. So while I do pause a little bit at the circularity that you're seeing in terms of deals, I also understand that it can be part and parcel of how this innovation takes place. One of the things I would stress, though, is AI is not a bubble. It's not a boom. It's a boom and bust cycle. It is inherently cyclical in that if you think about some of these ebbs and flows in supply and demand, there's going to be some cyclicality to this AI, even if the broader trend is more and more entrenchment. We have to watch things like adoption. We have to watch things like how companies are financing this capital spend. But inherently, there is a chip cycle. There is a CapEx cycle. If there is economic weakening down the line, and it's not something we see immediately, but down the line, that can impact some of the downstream adopters and therefore change some of the economics around this. So they're all things to watch. But what I would say is there are going to be ebbs and flows in this AI trade, even if the broader trend is moving stronger, moving higher.
Meera, it's good stuff. Something really to pay close attention to as we move into the next year. Thanks for coming in.
Thank you.
Meera Pandit, J.P. Morgan.